What are the next big opportunities in the European cannabis industry? Please help me welcome our moderator for this hour, Georgia Glick from Hanway Associates. Next to her will be Alfredo Pascual, VP of Investment Analysis, Seed Innovations. Give him a round of applause. Amaury de Poret, CEO, founder, and CEO of Enexis AB. Another round. Beck Muslimov, co-founder, Leafy Tunnel. Hector McNeil, co-founder and co-CEO of HANetf. Deborah Johnson, president of Plum Ventures. And last but not least, Rebecca Allen-Tapp, business development manager, AGI. Thank you. Let's take it away.
Thank you all for joining us today. We are here for the finance panel, where we will be discussing the next big opportunities in European cannabis. I am joined by a fantastic lineup, who I will introduce very shortly. But first, my name is Georgia Glick, and I am head of partnerships at Hanway Associates. We have been advising cannabis companies in the sector for the last 6 years, and we focus on market research, strategy, regulatory affairs, and doing due diligence for investors. We also publish reports through our ARM First Wednesdays, and they are free to download on our website. I'm going to introduce the panel now. So to the left of me, we have Alfredo Pascual. Based in Germany, Alfredo is a prominent industry analyst who has been identifying opportunities and generating unique insights for businesses and investors in Europe and Latin America since 2016. He is currently VP of Investment Analysis at Seed Innovations, the AIM-quoted company, investing in fast-growing and industry-leading businesses with a focus on the medical cannabis, health, and wellness space. Before joining Seed Innovations, Alfredo worked as international analyst at MJ Biz, where he focused on covering how markets and investments were evolving internationally. Next up, we have Amaury de Porte. Amaury is co-founder of Enexis AB. Enexis is a Stockholm-based investment company focused on the legal cannabis and plant-based industries. Established in 2018, Enexis has made over 20 investments to date in these sectors. Next, we have Beck Muslimov. Beck is co-founder of and partner at Leafy Tunnel, an early-stage venture capital fund investing in European and global psychedelics companies to address mental health and pain disorders. Before Leafy Tunnel, Beck was managing director at Blue Wire Capital, where he invested in early-stage rounds of the leading European tech companies, including Monzo and Deliveroo. We also have on the panel today Hector McNeil. Hector is a veteran of the ETF industry and established HANetf, Europe's first independent white-label ETF platform, in 2017. Prior to this, Hector founded Boots ETP, which was purchased by Wisdom Tree in 2014. Next on the panel, we have Deborah Johnson. Deborah currently serves as president for Plum Ventures. She started in the cannabis industry at the ArcView Group, working with investors on deals that range from technology, cultivation, brand, and license holders. And finally, we have Rebecca Allen-Tapp from AGI Plant. Originally from the US, Rebecca has been working in the cannabis industry since 2016. She's been a partner at a licensed production facility, director for a national laboratory equipment distributor, and most recently, she's relocated to the UK to put her experience as both a professional and patient to work, developing an application-specific sales channel for a global chemical reactor company, AGI glass plant. Thank you guys all for joining me today. We have quite a lot of people on the panel, so we are going to be jumping around a little bit in terms of topics, but hopefully we'll manage to get through it all. So I wanted to start today by kind of asking a question to Amaury and Alfredo. Obviously, Amaury, your firm Enexis is based in Stockholm, and you're a private firm, while Alfredo Seed is listed. So I wanted to start by asking you both, what is your long-term vision for the cannabis sector, and how do you balance that with the kind of shorter lead times and shorter demands that are often now demanded by investors?
You want to start?
I can start, sure. I mean, we're in a lucky position that our investors are mostly family offices, which have much longer-term view. So we don't feel there is so much time pressure for us. Even if we're discussing earlier, I think if there is a norm in our industry that everything's taking much longer than anyone first thinks. But I mean, our vision for the industry is a cautiously optimistic one, and betting really on the medical market, growing organically, and having the adult market much more as a bonus than relying on it to generate performance, at least in the short to medium term.
Fantastic.
In our case, the company where I work for is listed, and we invest both in liquid and non-liquid assets. So some of our cannabis investments are also listed companies. So that's how we try to manage the timing part of the question that you have. And in addition to what was just said in terms of the medical markets, the way that I see them usually, but not always evolving, and the German example, I think it's a good one, and the most prominent one in Europe as well, is that these markets usually start from something that is exceptional, like the case of Switzerland as well, until very recently. Then they grow into a more real medical market, with most companies truly focused on trying to provide product in the supply chain. That growth is normally more linear than exponential, unlike what many expect. Then these markets become quite saturated in terms of product available quite rapidly, and there's a lot of pressure to generate revenues there. That partially because of that, also a quasi-medical market usually develops with patients accessing to flower that maybe are not really that sick and shouldn't be getting flower, but they get it anyway. And we are seeing that in different markets, be it Germany, Australia, or Israel, for example. And then the next step would be recreational, of course. And when that happens, there's usually a shift from many companies that are operating in the medical sector simply because that's what's legal, but it's not where they want to be operating. They want actually to be operating in the recreational market. And maybe there are other companies that are truly focused on the medical part of the market and want to stay there even after legalization. So I think it is important to think, like, what's the DNA of the company where we are investing, and where do they want to be long-term if the markets evolve in that way?
So do you specifically look for companies that you know are not intending to try and do a pivot from medical into rec?
Absolutely. Again, recreational could be a bonus, but relying on it for the business model simply makes no sense. I mean, there are so many delays usually when it comes to recreational legalization. Even when we can speak later about the details of Germany. I don't want to take all the time speaking about that, but even in Germany, where we have a commitment from the government to legalize, still nobody has any idea of how that's going to be done. And even in terms of timeline, it's still everything so intangible. So, I mean, it surprises me to see companies that have business models that only make sense if recreational is legalized.
That makes a lot of sense. And back, Hector, would you say that your vision for the sector differs in any way to Enexis and Seed, or is it pretty similar?
We venture funds, and for us, every investment we make should theoretically return the fund, meaning that it should produce 10x multiple, and that involves that assumes that the approach we take with companies we invest, that this company should be scalable to billion-dollar outcomes, addressing large markets. For us, it's also important that the business models are asset-light. So for this reason, For example, at Leafy we don't invest in cultivation, sort of part of the supply chain, because it's very asset intense and also quite difficult to defend the business model. So we always look for businesses where first you can defend. So distribution, our thesis is that's in the downstream parts of the value chain, most of that value will be accrued, and it's easier to defend that segment. And also we like also ancillary businesses which enables supply chain, asset light, anything that would allow us as a fund managers to meet our objectives.
Fantastic. And it's obviously a very challenging time to be raising capital, especially in cannabis. And I'm sure there are a lot of entrepreneurs sitting here in the audience today who are wondering, what do they have to do to get 2 or 3 of your firms on their cap table? So maybe starting with you, Beck, what advice would you give to entrepreneurs who are seeking to raise capital from cannabis specialist firms like Leafy Tunnel?
I think twice. Maybe you don't need Leafy Tunnel on your cap table. I think if you say that, and you didn't do homework, and you say that we are right investor, I think I would be wary of that, because then you're probably not given enough time to consider all the factors, and so the founder should be first of all should be very articulate in his vision, what he's trying to achieve, be very specific, and that would then dictate what type of investors these founders need. And also the type of people they need to hire, type of partners they need to work. And we, time and time and again, we see, for example, founders who, let's say, raising a seed round, the first institutional capital, and then they say in 6 months they're going to list. For us, it's a immediate red flag. We're not investing in companies which trying to, not in the sort of area of building business, but sort of in the trying to jump on a hype and monetize. So we're not investing in these type of businesses. So founders should be, very truthful and honest in what he's trying to achieve. We, as a venture fund, the duration of the fund is 10 years. So this is a time perspective we take on the sector. And then, founders should be very honest and with investors about his intentions if he's in this industry for a long term. Also, the other advice I would recommend founders to be think again whether you actually need to raise capital. One of the criteria we look at companies is capital efficiency. We like founders who wants to do more with less resources. Sometimes founders, because if you raise capital, first you dilute yourself, your ownership will be diluted. Then second of all, you will get another stakeholder in your company, which would need to protect their own interests. That potentially can slow you down in terms of the speed of execution and so on. So I think founders need to be very selective and very strategic as well, whether they actually need to raise capital. Also, we like founders who quite consistent with that and find partners who has the same level of alignment.
Fantastic. And you mentioned red flags, and we were discussing this earlier, but we speak a lot about things like buzzwords like funded capacity or size of facility being quite laughable in the industry now and immediate red flags, whereas a couple of years ago they were quite widely accepted terms in the cannabis sector. Maybe starting with you, Alfredo, what are some of the kind of key metrics for success or buzzwords that you see in investor decks that you think that is immediately a red flag?
So let me start with a yellow flag and then with a red flag. So in your previous question, you asked like what would you recommend to companies trying to raise capital from cannabis specialized funds? And I think the key part is cannabis specialized funds. And as someone who has been working in the industry since the end of 2016 and always from Germany, I find it perplexing sometimes when I receive decks that I don't know, I have to go through 10 slides telling me about how big the German market will be one day. I don't care about that because I've seen that too many times already. I need to know what the company is intending to do differently and not be educated in a way about how the German market will be one day. I mean, yes, it is good to see what the founders think about the market, and that's when I often see yellow flags, when they, I don't know, believe certain estimates of certain consultants that never materialized in the past, but somehow they still believe that they will materialize in the near future. So that's kind of a yellow flag, I would say, not adapting the investor deck to investors that actually know about the market already. And in more recent times, and actually a red flag, I would say, and speaking again about recreational in Germany, I find it very, very surprising how some companies already have in their investors' decks, like starting in January 2024, we will start selling recreational cannabis in Germany, either be it a German company or a company from elsewhere in the world that already knows that they will be exporting to Germany in January 2024. I mean, it's going to be more complicated than that, probably, and it's a red flag when the business plan already depends on sales in Germany. So that's like a new trend that I am seeing right now.
Definitely. And Deborah, do you have anything to add to that? Are there any kind of key red flags that you are identifying in investor decks?
Thank you. Those are all very relevant points that have been already mentioned. But what I would say is there's some sort of a fallacy out there, pardon me, that if you grow it, people will come. And that's not always the case. And so there's a certain amount of mainstream professionals who have experienced great success, and they think that they can just transition right over into the cannabis industry and have all of those skills apply accordingly. And as we are aware, the cannabis industry has very specific needs identified with it. And so I think it's important to look at who is on the team and what their skill set is. And I think that one of the most important skill sets you're going to need to see on that team is people who have a regulatory background or regulatory influences, because there's so much going on and you really do need to understand and navigate what's going on with those regulations. I also think that in terms of future looking, there's a limited options, especially here in Europe as of right now, whether it's the public market or mergers and acquisitions. And so having a realistic time sense for the growth of your company and how you're going to exit over time, I do think that people have a long timeline in their mind when they're investing, that there's that 10-year time frame. So how are you going to navigate that? I think that's what I'd start with.
One more thing, what Deborah just mentioned is very important, I think, in terms of timeline, and a sensible timeline as well, and also a sensible revenue projection, which is something that that still perplexes me. That often like investors' decks are presenting a production plan and not a business plan, and this is what I'm gonna do to have my facility ready. And once the facility is ready, wherever it may be in the world, the following year I'm gonna sell 10 million. And then I usually ask these entrepreneurs, do you know how many companies are actually selling 10 million euros in Germany or elsewhere at the moment? Not that many. It's not that you simply need to get product to the market and then somebody's going to buy it. It's more complicated than that. Maybe that was the case in 2017, 18, but not anymore.
Definitely. And a number of your firms have actually invested in the same companies. Enexis and Seed, you've both invested in Southwest Brands and Northern Leaf. And I'm quite keen to understand, what is the process of collaboration for your firms? I mean, I've heard of rumors of investor WhatsApp groups and intel sharing, but I'm quite keen to understand what that process looks like. Like, how much intel do you actually share with each other?
Well, I mean, I think it's such a small industry and such a young industry, so, and it is what is nice about it, that you have to collaborate. And I mean, we've made investment together with Leafy, we made investment together with you guys. And I think, you know, it's a very straightforward and transparent exchange of information, and I think we have regular talks, discuss what we see on the market. So I think it's a very collaborative process, and it's something that is very nice about this industry, and which is very different from the VC industry, for example, or other private equity industries at the moment.
Yeah, I mean, I see barely any competition, if at all, with the other funds. I mean, it's still such a small industry. And I also think it is good for the companies where we invest when 2 or 3 or most of the very few cannabis specialized funds in Europe invest in those companies. I mean, it gives them quite a lot of credibility, I would say.
Fantastic. And Becca, you're in a very unique position as you're a patient, but you also have a lot of commercial and business expertise working in the cannabis industry. There's kind of, we know that the industry kind of suffers sometimes with this balance between roots and suits and, being able to actually take patients' perspectives and making sure that they're actually included within medical cannabis companies in particular. How do you think we can incorporate patients into the cannabis industry while balancing the need for specific business expertise?
Great question. So I think we need to look at it more of a symbiotic relationship between the patients and the cannabis businesses. I think right now they're very divided, and we need to look about how we can work more together and play off one another. I also think that utilizing more of the patient groups, I think that that's a really untapped resource that's out there. I mean, they're collecting data, they're doing a lot of education, and I really feel like they're underutilized. Oftentimes these patients are going to, having several appointments with their doctors and doing follow-up, so that data is not really being put to use. Another way I think is hiring them. I know Deborah was just talking about how having people who have experience, there's a diverse background. Like I'm up here, I'm a patient, but I also have a very strong background in cannabis. So I think that in the same way that we see a lot of companies soliciting to veterans and certain people, I think that the cannabis industry needs to start soliciting to patients and get them more involved.
Fantastic. Did you want to add something?
Yeah, I had a point to make on that. I was sitting in on the last panel, and there was quite an emphasis on more medical research needing to be done to really back up all of this. And what I think is, what I see happening certainly in the United States, is that the families who are experiencing medical needs that are being addressed by cannabis are the ones who are really driving both the investment and the research. And I think ultimately it may fall to a lot of those high net worth individuals or family funds to really fund that medical research because they have a personal connection to it and really want to see the results there. So I think that's certainly going to be a source of funding for the research.
Exactly, and it can have such a direct effect. We've seen in the UK when listed companies have had bad reviews on patient forums and it's actually affected their share price, so it's super important. Is this something, Beck and Amaury and Alfredo, that you look for in companies that you are going to invest in the medical sector, how closely they are incorporating patient feedback and patient focus groups?
It's something we look at a lot, and I think it's an area that needs to be improved, and there are some good tools that are coming up to the market, whether through forms of apps or digital tools, but data collection is an issue, and it's something I think the industry has to work on quite a bit.
Fantastic.
I think it's like yes, we do look at that, and particularly if it's in a somehow organized research framework, then even better. There's also some abuse of that, I would say, right now in Germany, of, companies engaging directly in patients' forum, and are they truly trying to have patients' feedback, or are they trying to somehow market their products in patients' forum when they know they shouldn't be doing that because it's a narcotic that you cannot just promote out there, right? And this is also connected with what I spoke before about medical markets often also developing into partially quasi-medical as well, and companies pushing their product via engaging with patients. That's typically not how pharmaceutical companies work, right? You don't have pharmaceutical companies going to patients' forums and engaging with the patients, right? So I think it is important, yes, to have patients' feedback and know how things are going, but I would rather see that in an organized research way rather than risking having the regulator telling you that's not what you're supposed to be doing.
From a more practical point of view, from our fund perspective is, as I mentioned, we focus on parts of the value chain which is defensible, so we look at last mile, so anything which is closer to patients. This is very important for us when we invest where the company working closely with patients. And one of our co-investments with Enexis was in company Life, which is a UK medical distributor. They have clinics and they have around 8,000 patients in UK that they serve for their clinics. The companies, half of the company staff is patient coordinators. So they work with patients and incorporate the feedback, and absolutely, it's really crucial for us also to monitor whether the company is working with the regulator proactively and addressing all the regulator, let's say, concerns around how patient needs are met. In addition, again, we invest in ancillary tech businesses, and one of the area we're quite excited about is personalized treatments. And that's only possible through if you actually collect the data from patients and able to capture this data, use this data, and create that personalized medicine for the improvement of efficacy.
Amazing, fantastic. The next kind of topic that I wanted to discuss, I know obviously there's a lot of panels and everyone's talking a lot about the prospect of German legalization, but I know that obviously from an investment point of view, it's quite tough to talk about, given that there's no kind of draft legislation or frameworks, and no one on this panel is really interested in crystal ball gazing. But one thing that I wanted to discuss in a bit of detail, as it does affect quite a few of you on this panel, is Proceeds of Crime Act. So the Proceeds of Crime Act prohibits UK companies or individuals from investing in or profiting from activities that contravene UK law, even if the activity was carried out legally in another country. Hector, I know you have had some experience with this. CBDX had to remove chocolate, a company that, Namaste Technologies, a company that held a 49% equity stake in chocolate after they became licensed to produce adult-use cannabis products. What was the process like, and how did that affect how you went on to kind of assess future opportunities?
Yeah, first of all, can I just ask, who knows what an ETF is? You just put your hand up. Okay, so we're starting at a very low base. Yeah. So ETFs are basically funds that trade on an exchange. They're very popular in the US, and in fact, the cannabis ETFs in the US actually go into the billions of dollars of assets under management, so they're absolutely huge. And they're actually probably the simplest way for investors to invest in any sector because they trade on an exchange, and you can buy them for as little as less than 10 euros a share. What they are is an index of companies, similar to something like the SMI or the S&P 500, but very specifically for a certain sector. Now, the firm I co-own, HANetf, we created Europe's first medical cannabis ETF. And the challenges around that was actually finding selection criteria that can pick the companies up and put them in an index. Several challenges with the cannabis sector. One is largely what everybody's talking about here is, the companies are pretty small. There are some large companies, but they're predominantly in the US and in Canada. The one exception, which I'm sure you all know, is GW Pharma, which obviously is part of Jazz Pharmaceuticals now. But one thing that always amazed me about that company was because of them, Britain is the largest exporter of legal cannabis in the world. Nobody would ever think that. They think it'd be Canada or they think it'd be the US, but actually it's not. It's Britain. So maybe not since Brexit, but we'll stay off that topic. So the index itself, what it does, it has a set of rules on how it chooses the companies. And these rules are largely driven by a sort of algorithm. And the algorithm will usually have things like market capitalization, average daily trading volume, etc. And actually, the cannabis index we have which is the medical cannabis index, it's the smallest market cap we have for any of our thematic products. It's at $30 million. Normally, I'd say we're normally at the $1 billion or 250 million minimum. But for this sector, we felt it was really important to get in early and to get a broad range of companies. Now, even with that level, we've then got the added complexity, which we're talking about here, is around the laws and regulations. Now, this product is actually listed in London, Germany, and Switzerland and France. So from that perspective, it's got to fit a lot of laws, probably the UK being the most draconian, being the Proceeds of Crime Act. So what that index has to say is it takes up the companies, and then it says, are these companies purely exposed to the medical sector, or are they exposed to the recreational sector? So you've got to screen out all the recreational companies. And actually, one of the biggest drivers to this is that the people who provide your administration and custody for the equities are the big banks like JP Morgan or Bank of New York or people like that, even in Europe, but basically based in Dublin. And Bank of New York is our custodian, and they basically said, we will not touch anything that is in the recreational space. You've got that layer of complexity. So then we also had to go and get a barrister's opinion as well for the product. And then we have this selection criteria. And actually, when we launched the ETF, it launched with as little as 9 companies because of all those selection criteria. At its peak, it got up to about 45, which I think is a really good measure of the fact that the sector is growing and more companies are in place. But common with all sort of growth equities, a lot of those companies have decreased dramatically in value. So we're down to about 26 companies now. So there's a lot of complexity around that. And the product itself actually rebalances. And what rebalance says is it sort of reapplies the rules every quarter. And then you add or take away companies that either meet the criteria or don't meet the criteria. Now, going back to one of your questions on Europe, we have very little European exposure in that index. And that's really the challenge, I think, because I think these gentlemen and ladies are at the early stage of the market. I think that sort of shows where the industry really is at this point. But obviously the dream is that the companies get big enough to come into ETFs, because then that really brings a very broad and democratic audience of investors to the space. So we've got to get these companies more and more growth, and then hopefully listed, because ultimately the companies will only list if there is going to be value there. And then obviously they can go into indices and be part of that. I mean, you probably all hear about companies that come in and out of the FTSE 100 or the Eurostoxx 50. So ultimately, that's a big process, and I think it's really important for this industry to do it. But one thing I would say is that, if you are all very interested in this sector and you want a really easy way to invest in it, then ETFs are a real good way to do that, and it drags up all the sector because you do have a trickle-down impact in that capital markets by the money going into these companies, and then obviously increasing the value, which obviously increases the value of the whole sector as it rises from there. But proceeds of crime is obviously something you've got to look after. And actually, funny enough, you say Namaste, actually, that's the only company we've had to take out so far, and it was 2 weeks after we listed the product 2 years ago. So, but it showed the mechanism worked from that. And I think from an investor's perspective, where that's really important is they can buy the product in the safety of knowing that they won't be hit by the Proceeds of Crime Act or any other rule or regulation in the EU when they're buying it, and that's really one of the key features of the product, we believe.
Fantastic. And Alfredo, your firm is domiciled in Guernsey but listed in the UK. So what will happen when medical companies in your portfolio start operating in recreational markets?
Okay, so the problem more than Guernsey is being listed on the London Stock Exchange. That's where our regulator steps in, and basically because of the Proceeds of Crimes Act would not allow us to have investments in companies operating in the recreational sector, even if that is legal in Canada or in the future in Germany. What would happen when that happens in Germany and our portfolio companies start operating in the recreational sector? Well, first of all, we need to see if our portfolio companies really would want to operate in the recreational market. We still don't know how those rules would be. Yes, it will probably be a big market, but it will probably also be a big market where everyone will want to play, and maybe the portfolio companies that we have would rather stay being focused on the medical sector. And in the case that they do indeed want to operate in the rec market, that would indeed be a problem for us. But it would not be a surprise for us. When we first invest, we always try to have an investment agreement that would allow us, in the case of the companies trying to operate in the recreational market in the future, to have an orderly exit. And even when that happens, I think it's a nice problem to have, because I don't know, an investment that we have in Germany right now would probably be worth much more than what it is right now if the company really has a chance to play in a much bigger recreational market, and there would probably be many more investors interested in having exposure to that company. So, I mean, yes, it would probably be a problem, but it would probably be an orderly problem because we already know that it could be a problem, and since the first day we start negotiating with our investee companies, we are aware of that. And in the past, it has also been an issue with two of our exits that we've had, the company that I work for. So once was when Nuvera was sold to Afria, and the more recent one and more relevant one was when we sold Emac Life Sciences to Curaleaf. Most of, or yeah, I think all other than us, the investors in Emac Life Sciences got Curaleaf shares. And as everyone probably here knows, Curaleaf operates in the US recreational market, so we could not hold shares of Curaleaf, which was actually quite nice for us because we got the cash and then the stock went down, so actually it was all right, I would say. But yeah, so we've had this issue in the past. We may have it in the future, and we are aware of it. And we should also consider the possibility that the UK changes the law or the interpretation of the law. I mean, lawyers are more qualified than I to speak about it, but I think when the Proceeds of Crime Act was done in 2002, the intention was not to prohibit UK investors to invest in the legal cannabis industry in other countries. I think it's more an interpretation of the law than what the law actually says, and there's a chance that as the world continues to evolve, maybe the UK interpretation of that changes, and it indeed allows us to operate in the rec market as well.
It seems to be a very UK-specific problem, because discussion we've had with other stock exchanges in Europe seem to show a much more pragmatic approach, where as long as the activities developed by the companies are legal in the jurisdiction where they're being developed, then the stock exchange is fine. And I think we're actually going to see, with the next few months, some listing happening in Germany, which will pave the way for recreational activities and recreational listings.
Fantastic.
Yeah. Sorry, could I just make? I think Germany's absolutely fine for listing, has been for a couple of years. Italy's no. Ireland, actually, it is allowed, but they have said silently no. So they're not allowing it. We've actually had a recreational cannabis ETF in the Central Bank of Ireland now for 2.5 years in filing, and they won't even, respond to us. One thing I would say, the mechanism actually you'll have to do when the companies move into that space, you'll have to actually report yourself to the National Crime Agency, believe it or not. You actually have to do that. And there's a mechanism, it sounds quite scary, but you do this and then they come back to you, or they don't come back to you where they have an issue on it. But you actually have to report it as a crime.
Fantastic. And speaking of public markets, Beck, what advice would you give to companies who might be eyeing a public listing? When is the right time to list, and what stage of maturity do you think a company needs to be in cannabis?
I think the company needs to think strategically about the fundraising, and it's not only sort of in the short term, 1 or 2 years, but actually, even longer than that. Because with the public listing, although we see founders for whom sometimes it may seem as a vanity metric, you list the company, you sort of get your satisfaction that your company is publicly listed, but it doesn't really achieve anything, to be honest. Because when you list your company on a stock exchange, you're immediately shutting down the options for raising capital from private investors, from funds like us, for example, because we're not going to invest in public companies or companies which are wants to list company in the short term, because we invest in companies and want these companies to achieve certain milestones that will result in significant value accretion of those companies. So the founder, again, need to think twice about whether they want to list the company. Then it also brings the headache because you need to do reporting. Your mindset as a founder will shift towards sort of short-termism, where you will live, by quarterly deadlines where you need to submit reports, and then you need to make sure that those results that you're reporting are consistent with investor expectations. And then you sort of turn yourself actually not in, from a founder, you become an employee of those retail investors, because you're always trying to meet those short-term expectations, which then obviously come at the expense of, long-term viability of the business. So again, founders need to think twice about, listing the company prematurely. The company needs to be ready for listing, and also I think The problem is that also we see in companies that list they founders list their company and then the share price plummets, and retail investors burning their hands, losing the appetite for the cannabis sector, and that actually hurts the sector overall. So again, my sort of recommendation would be just to think twice again.
Fantastic. And we are getting quite close to opening up to Q&A, but I wanted to open this up to all of the panelists and give you all a chance to answer this. But given that the title of the talk is Opportunities in Cannabis, so from your perspectives, over the next kind of 5 years, what segment of cannabis, and even within that segment, what part of the value chain do you see the most opportunity? Maybe starting with you, Alfredo, and going down.
I don't like the idea of thinking that a specific market, be it, I don't know, medical cannabis in country X or recreational in country X or Y, will be big, and therefore that's the big opportunity. That a market will be big, that doesn't necessarily mean that it will be a big opportunity for investing or for entrepreneurs to operate there, because again, maybe if there are no entry barriers, everyone's going to try to be there and it's going to be a race to the bottom. So actually I think it makes more sense to have some focus in the market rather than see what's the next big market and go rushing into that market.
Definitely. Amaury?
Well, I think as the industry becomes more mainstream, one should not overlook all the ancillary sectors. So can be media, software, compliance, logistics. So all the environment around the cannabis industry itself. So I think there could be some interesting opportunities there.
One of the reasons why we decided to sort of focus on the medical markets for our fund is that Europe has a really good chance to get it right compared to North America, Canada and US, where I think the recreational markets maybe move too fast. We live in the void for research for the evidence of cannabis for medical and pharmaceutical purpose. And that's our actually thesis, that Europe has a lot of life science clusters, a lot of life science biotech professionals that can actually take and exploit that advantage. Because in US, for example, cannabis is Schedule 1 and it's a federal prohibition, and that creates barriers for R&D, for in order to do the R&D. There is a story of University of Colorado where labs there, in order for them to do the cannabis research, they need to take cannabis out of the territory where university is, because otherwise, if they're going to get caught, they will lose federal funding. So what they do, they put their lab in the minivans, and then they drive these minivans out of the university, and that them allow to run those research on cannabis, and then at the same time not lose the federal funding. So this is type of barriers that US has at the moment with research in cannabis. Europe doesn't have that federal prohibition. So, and one of the largest exits in pharma, in cannabis pharma, was a GW Pharma, which was sold for $7 billion. The company is UK based, and this is not a coincidence that this company actually emerged in European landscape. So we actually believe that there will be, new type of GW Pharma, and I think it's a great opportunity for Europe.
Fantastic.
Yeah, I'd like to see a good slug of the companies in our index come from Europe, and then over time, rather than being just a global cannabis ETF, we actually get a European focused one. So that would be really what I'd like to see. Probably won't be 5 years though.
5 years.
No, it won't be 5 years.
I know that number 5 is a good number. So I certainly think that a medical direction. I echo Beck's sentiments on that, and I think a lot of that has to do with consumption methods. So finding new ways to consume cannabis, whether that's nanotechnology, whether it's beverages, patches, other sources of, inhaling, et cetera. I think that there's a wide open opportunity in those sectors for exploration and total addressable market. Now, I'm going to just take 1 second to make a little plug. I'm also chair of ASTM, which is the Association of Standards and Measures. It's an international organization, and they created a D37 chapter, which is specific to cannabis in 2017. I am heading up a brand new subcommittee, D3710, which is on finance, lending, and insurance. And I am looking to diversify and gain new members in the regulatory risk, insurance, public markets, private markets, to come and lend their voices to the developing of these standards so that when you want to go on a public market or if you want to get insurance or banking or so, there is an understanding of really what does that standard look like in order to get that in place. So I welcome anyone, and I apologize for wrecking the stream here of this, but I did want to mention this when I have an opportunity here, so thank you.
Awesome, I love it. So I'm a little bit of a palate cleanser. I am not from a finance background, so I'm going to give you all my point of view. So at this point, I think that medical cannabis is still obviously what's driving the market in Europe. It's estimated to be a 2.3 billion euro industry by 2026. And I also think that it's going to be a leader in the research and development front. So, but some actual areas that I think that I would be looking to would be production and distribution, ancillary businesses, cross-border commerce, specialized clinic platforms, especially things around data coming from patients, and then research and development hubs. My background is in post-extraction refinement, so I honestly think that one of the things we're going to need to see is some domestic production. We're going to need to see more production here because there's already such a strain on the supply. And with the UK coming out recently, the Cannabis Industry Council just made a really, really lofty goal of 650,000 patients signed up in the next 5 years. Currently, they're at 17,000, and they're already struggling to keep up with supply and demand. So this is going to become a problem across Europe, so I think that we need to explore domestic production.
Great point.
Fantastic. Thank you very much, guys. We have got time for Q&A now, I believe. So are there any questions from the audience?
Hi, it's Oliver Zugel from Volumed. How are you? Thank you for the speech. It strikes me somehow that with regards to the medical industry, cannabis industry, we're seeing a repeat movie here. We started off in Australia, then we went to Germany. When we talked in the prior panel about Switzerland, the same issues came up all again, which is patient education, affordability of the product, how do I get access easily as a patient, and the lack of clinical research. It's the same story, really, frankly speaking. But I'm wondering, you have seen a lot of this, and therefore the discontinuities you expect to occur in the medical cannabis world over the next 5 years, what are they? So, and the companies you think who can actually disrupt the current state of play, which has taken most of the medical cannabis companies from raising a lot of money to produce a lot of losses and get out of business and hope to go into recreational. Do you see on the horizon players which you think can disrupt the way the things are going to the extent you think that is how the industry will be shaking out? So it's more of a strategy question to you guys.
Maybe I just can answer the one. I think that one of the disruptions that's coming up is telemedicine, and obviously this facilitates enormously the patient-doctor interaction, and we are seeing this really popping up left and right now. So I think this will actually accelerate and eliminate this bottleneck of patient and doctor interaction. So that's one example.
I think it's a good example, actually. And when I was still working for MJBiz Daily, and one of my last stories about Germany, which was in January 2021, was precisely about the private market in Germany and how it was being developed by telemedicine. Of course, that was extremely accelerated by the pandemic. And yeah, it has its advantages and disadvantages, right? Because it provides with access to many more patients. However, regulators may not like it that much. The fact that some, maybe a minority, but some of these patients are having access to cannabis via video consultation, and maybe they are faking their symptoms or whatever, and then it creates a quasi-recreational market there as well. And right now in Germany, you can do everything from home, basically. You don't need to go anywhere. You can even order your cannabis via WhatsApp with a pharmacy called Broccoli 420, right? That's all legal right now in Germany. So it may have some regulatory backlash as well, but it indeed accelerated the market drastically. I mean, if we see in Germany how much reimbursement is growing, like the market that is being reimbursed by insurance, it's very flat. I mean, yes, it is growing, but it's nothing major, the growth. The growth is being driven by the private market right now in Germany, and that's been indeed accelerated by telemedicine.
Fantastic. Any other questions from the audience?
I'm Dr. Benedict Henry. Good afternoon. Thank you. This touches a little on the point you made, Becca, about the demands of the industry to meet consumer supply. And I just wonder whether the rest of the panel share that view, that supply is being now, or is going to get to a point in the very near future where it's outweighed by demand. And then this is a two-part question. If that is the case, do your companies or the companies that you invest in give any thought to both the environmental demands of producing wholesale cannabis and also the social factors? Because as we know, it's a very, very energy-dependent production process. And there are many countries in the world where the people that grow cannabis, and talking very simplistically, are people who don't see payback from it, and we can all think of those countries. And so I just wondered what thought goes into that when you're investing.
It's an excellent question. Many thanks for asking it. And going always back to Germany, which is where I live, and the market that I know the best, it is incredible the amount of product that is being destroyed right now in Germany, and almost nobody talks about it publicly. I mean, you don't see any journalist or any analyst speaking about how much is being destroyed, because we simply don't know, because companies obviously don't like to disclose how much they are destroying. And why is it being destroyed? Because it's not being sold. There are many companies importing product into Germany that, for different reasons, sometimes because of non-compliance, but sometimes simply because the shelf life is over, they need to destroy the product, and that has an environmental cost that it's ridiculous, right? So yeah, I mean, I think it is an excellent question in terms of supply and demand. I think there is no need for one more generic oil or one more 16% THC flower in Germany. Of course, if it is some very special product, for whatever reason, it may be needed, and the market is still being driven by very high THC flower. So it is hard to say that there's more supply or there's more demand, because we need to be more specific about the type of product. If we are talking about 25% THC flower, probably there is not enough supply right now in Germany, because everything that goes to Germany with 25% THC is sold very rapidly. But if it is 15 to 21% THC, there's just so many flowers available right now. And if it is the one more bottle of generic oil, again, there are so many different brands. And it's so, in the case of oils, it's even more complex, because you gotta convince, I mean, in the case of flower, it's usually the patient pulling the product from the doctor. In the case of oils, and I'm simplifying a little bit, but you can see that this trend, in the case of oils, it's usually the doctors prescribing it, not that much the patients asking for a specific oil. And it's so hard to go to a doctor and tell the doctor, you should prescribe my bottle of oil, when the doctor already received 20 other companies with almost the same product, just a different brand. So yeah, there is an issue of supply and demand imbalance at the moment. It depends on the type of product in particular, but it's a very real issue. And I think it would be super interesting to know how much product is being destroyed in Germany right now. Nobody knows that I know, at least.
Do you have something to add, Becca?
Yes, I'm going to piggyback off that because I can weigh in on the UK. So on the UK side, behind Germany, which is obviously leading in like the amount of medical patients they have. So then you have Italy, and the UK has a pretty decent amount as well. Nowhere near the numbers, but still we're happy about it. With that being said, they're destroying a lot of products, especially in the UK. There's tons of product being destroyed just because the R&D license. So everything pretty much grown in the UK is only destroyed, and everything that you're seeing on the that could be available to medical patients is imported. And part of the problem is beyond flower. A lot of what you're seeing more is concentrates too. Like for patients specifically, flower is challenging because it's not as easy to dose. So you see a lot of patients with actually that need consistent medical results go to things like oils and tinctures and vapables, which most of those are coming from North America. So we have a couple big companies from North America that have recently said, we're pulling out of Europe, we're taking a break and refocusing on our restructuring, and that's really going to hurt our supply in the UK. And that stuff it's very, very challenging, especially with the Cannabis Industry Council coming out and saying, we're going to add 650,000 patients to the 17,000 you have currently. So it's definitely an area of concern for us.
On the ESG element as well, with most ETFs are what they call the UCITS wrapper, which is an EU set of rules for distributing products across Europe. And there's been a massive drive on the ESG space in this wrapper, and the European Union has brought in a whole raft of regulations called SFDR, and it's how you grade the funds. And I would say that most funds are going for either 8 or 9 category. 9 is very, very green. 8 is sort of ESG screened. And we've even implemented, not for our cannabis product, but for other products, our clean energy product, we've even implemented carbon offsets within the mechanism, within the product, to give you a carbon neutral investment as well. So I think it's probably the hottest topic in the investment arena is the whole ESG, and the cannabis space is no different than that.
Fantastic. I think we have time for one more question, if anyone has a final question. I think that's everything. Perfect. Well, thank you very much to everyone joining me on the panel today, and I hope you all enjoyed it.
Thank you.